Welcome to DBS Insights for Business Leaders, a webinar series. I'm Taimur Baig, Chief Economist. Today, we have the pleasure of having with us Surojit Shome, CEO of India for DBS Bank. In fact, today, or this month, marks the 5 years since Surojit has been in this position. Surojit, welcome.
Thank you. Thank you very much, and happy to be joining you on this webinar.
Surojit, you are based in Mumbai, India. India, by many measures, have had some of the tightest stringency around COVID-19. So let's kick off with you telling us a little bit about how things have been the last month or so for you, your family, and your staff.
So it's in fact actually almost 40 days since we've been locked down, and as I think an Oxford study says, India probably started with 100% lockdown from almost day one. Last 40 days, we've really been trying to look after 2 or 3 things. One, trying to keep the bank running, and but also keep our staff safe and be able to make our interactions with our customers safe, our branches safe. So we've taken a lot of steps over the last month and a half, let's say. So currently we are operating with all our branches open every day. Some of them open every alternate day, depending on which area it is and depending on the local regulation. But we are running the bank with about 16% people in office. So 85% of our staff are working from home. That's taken a fair amount of work on the technology front, because a lot of our systems are obviously not geared to working from home. And we've kept operations going every day on every working day. And we're meeting all our customer requirements. So keeping staff safe has been first objective. Second is being able to run the bank. And third is to try and see what we can do with the community. So with the customers, what we've done is we've rolled out some interesting insurance programs which cover COVID-19 related expenses. So we rolled out a group insurance for our treasurers customers, which allowed them to all get covered at no cost. We bought the other thing that we have done is stepped up our digital channels so that our customers can deal with us as seamlessly and without having to send paper. In February, we launched some new capabilities for our corporate customers, which have come in really handy, because it's allowed customers to send scanned images in a secure manner, which has allowed us to also service our customers. So that's been very helpful, both for our customers, but for ourselves. On our DigiBank platform, thankfully, we are already end-to-end digital. So our digital capabilities on our consumer franchise has really helped, and our customers really appreciated that, including a lot of customers have started using many of the features which they could use or did not use, like accessing the, let's say, the investment portfolios. And finally, we've done a fair bit on the community side. So working with several non-government organizations, we've contributed about 2 million meals for many of the migrant workers. We are stuck in Mumbai, in Delhi, and we've also contributed some PPE equipment, both to the police, but also to people who are unable to buy that, healthcare workers. And we are working selectively with, for example, UNICEF to provide some ventilators to some government hospitals. So a whole plethora of things is part of the, the entire bank's effort across all our major markets.
Surojit, for the staff who are working out of home, has the technology held up pretty well?
It has held up pretty well. I think the technology, of course, it was tested, but it was not tested for scale. So we did have to increase capacities. So we use different platforms for different, applications.
So Surojit, earlier, both you and I mentioned that Oxford study that India's stringency score is like 100 from day one of the lockdown. I mean, this has to have a seismic impact on the domestic economy. What are you seeing around you?
I would say painful to see the impact on the economy in the short run. It has resulted in dislocation of migrant workers. It is leading to pressure on individuals who are losing either wages or are facing, a lot of them have variable wages. They might still be getting their fixed compensation, but their variable compensation has gone out of the door. So a fair bit of impact. And but I do think that the measures that both the government but also RBI has come out with in terms of easing some of the liquidity pressures, some of the measures around allowing people to get some moratorium on their loans is helping both businesses. And we've rolled it out to all our customers on the consumer side as well as the SME side. And most of our customers are making use of that. And I'm happy to report that we made the system changes and rolled it out fairly quickly. And it's now available to our customers, and they are using that. So in the short run, at least from a liquidity perspective and financial burden, it's helping. But clearly, business is at a standstill. Transportation is standstill. So that's having an impact on people, and that will have an impact on the economy. Yes.
Is the situation same for the tradables goods sector, like the external sector, the exports, both of goods and services, as well as the big IT sector?
So tradables, some ports are still working, but from the port into the hinterland is not obviously working, or was not working in the first period of the lockdown. Some of those have been opened up, including, for example, the agri sector, where it was in the midst of both harvesting as well as replanting of the next crop. There have been some easing of both in movement of goods as well as movement of people for specific sectors. So trade is impacted because you cannot evacuate products from factories which are shut.
Of course, that distress or lockdown also means deterioration in credit conditions and financial markets health. You already touched on the fact that the liquidity injection by RBI has had a salutary impact on the health of the financial system. But give us a sense of where we are. I understand there's a lot of uncertainty and hard to make very concrete assessment of the credit situation, but what are you seeing on a day-to-day basis?
So, as always, the impact is most felt at the lower end of whether you talk about the income band on the individual side or smaller companies on the corporate side. So that's where the stress is most likely. We are seeing stress there, more stress in terms of elongated receivables for small companies, lack of cash flows, having to pay or being under pressure to pay their employees. So that financial sector is clearly has got sufficient liquidity. RBI has enabled liquidity both in the banking system, but also pushing some credit delivery by reducing the reverse repo rates, which is the rate at which the banks park excess liquidity to have overhang of liquidity with themselves.
Right. No, that's a fair assessment. It just underscores the extent of uncertainty around the horizon. Surojit, the viewers of this webinar would be very curious to know about the state of the supply chain in India. It's true worldwide that the supply chains have come under stress. Give us a sense from the banking perspective, because you play an important role in facilitating the supply chain through trade credits and so on. So take us through that, please.
Yeah, so both for supply chains which are cross-border, but also domestic supply chain, initially there was a lot of stress around whether the moratorium was going to cover them. It covers them, and we've made sure that that is rolled out to the supply chain in terms of immediate relief. As of now, it is more a question of liquidity and of P&Ls being damaged. Once we get through the next 3 to 6 months, I think you'll start to see some longer term impact. However, having said that, the larger companies have been quite proactive. They have come out and started to work with their suppliers, dealers, and we've got requests from our customers to roll out programs for their ecosystem to try and help them to ease the cash flow. And I think that's indeed a positive trend. Even today, we have one partner who's come to us saying they have 500 constituents which kind of are in their two-tier distribution system. They want a program to be able to infuse some liquidity. I think that is a very, very encouraging trend, and more companies doing that will help the smaller end of the value chain to survive through what is quite a catastrophic shutdown.
But it is good to know that an organization like DBS has the wherewithal and the quick-footed approach to provide solutions like that to their clients.
Yes, we are working with them. We are able to then ramp it up in a period like this. So hopefully it allows us to be able to actually effectively roll it out. It's not just the credit appetite, but also the delivery, which will probably be most important. So hopefully we'll be able to do a good job, given the capabilities that we've built over the last 2-3 years on being more digital and using the connectivity that India has developed with the India stack, but also digitization of the payment processes, the UPI rails. A lot of that is helping the broader economy, but definitely helping us as well, because we built a lot of our solutions on an end-to-end digital model from get-go.
What's your sense of the path to normalcy? I mean, where will India be 2 months, 4 months, 6 months from now?
Yeah, I guess that is a more than $1 million question, but I do think that it would be rockier than most people expect. That's my general view, that it will be slower, and given how large India is, how diverse, and some of our cities have fairly strong concentrations of urban, if you will say, aggregates which are very densely populated. I do think we will have stop-start nature of a lockdown being lifted. Having said that, I do think some sectors will get opened up. So the agri sector already showing signs.
No, I think your perspective is sound and spot on. I've seen cities around the world and countries around the world struggle with exactly that question and the preparedness in case there are multiple waves of this. So you're absolutely spot on. But Surojit, then, as the CEO of DBS India, how do you pursue a corporate strategy with that sort of a scenario?
Yeah, but I do think there are some opportunities for India, and that's what we are concentrating on. There's a 2-3 trends which I think are medium-term positive. One is the accelerated adoption of digital will definitely be an opportunity for organizations like us. Broadly, it will be helpful, but it definitely is, I would say, a big change in customer behavior. Earlier, 10, 15, 20, 25% customers were essentially digital. This has made sure that everybody had to have some degree of adoption, which means that everybody's level of familiarity with the technology which has accelerated. And that works to our advantage. It allows us to get a much larger accessible market to play with. We can then think about building products and solutions around higher degrees of digitization. I think that's one definite, I would say, advantage. The other is further dependence on local supply chain. I think a country like India, which has obviously a large sized country, enough labor, potentially enough investments, and a reasonable good legal system, albeit with challenges, could benefit, and hopefully countries like India can benefit. Because again, you have a large local market, which means anything that you make in India, you can service the local market and a regional or a multi-regional market. So that local market plus the global market and the need for alternative supply chains, I think is a medium to long-term benefit for India. The second is what we did not touch upon is the fact that if energy costs remain low for a while, again, India should benefit. It should have a little bit more fiscal elbow room to get over the shorter term problem. But if it stays like this for a year or so, the benefit India gets is quite substantial. So if it smartly uses it and can use that to get beyond the immediate relief costs, I think that could be worthwhile from an opportunity for us as a regional bank, but also with a significant presence in India and a desire to.
So Surojit, without any prompting, you made a seamless and effortless transition from the corporate strategy to the national strategy for taking advantage or finding opportunities in this rather bleak scenario. So you completely made me redundant there. I just want to ask one follow-up to that, is that do you see the policy environment calibrated toward taking advantage of that?
I do. I mean, it's interesting that in earlier this week when Prime Minister Modi was addressing the chief ministers, one of the things he talked about was, this whole, if you will, to fuel this spirit of states to be competitive, and the fact that we are a federal country, which means states can also kind of collaborate but also compete. So he said that you need to think about how to attract companies and supply chains to come to India. And I do think the central policy parameters would be aimed towards making investments better and faster, more single window. Always easier said than done. But this is probably one of those opportunities where I think the states and the center are aligned, that it's an opportunity, a smallish window, maybe 6, 9, 12, 24 months, where there would be a fair degree of interest in trying to diversify supply chains. This was not an event that anybody had looked at. So that would mean that a lot of companies, but also a lot of countries would look at how to diversify away from very aggregated or unipolar.
That's a fascinating snapshot into the goings-on in India and also in the context of DBS's challenges and opportunities. Surojit, we thank you very much for your time, and we wish you the very best of luck in the efforts and endeavors ahead. And of course, we wish you sound health.